Hey guys, what's up? In today's daily financial market news, most markets are more buoyant on the back of the US data we saw this afternoon. What started off as a quiet session in the European session and pretty much in the Asia Pacific session, the American and North American session didn't fail to deliver. So in the session we saw the US non-farm payrolls reach 120k. This came on the back of an expectation of only an 89,000 reported jobs increase for the month of September. So on the back of this, the US dollar rallied. This came on the back of quite a mixed week for the Fed, and also signalling that an economic downturn could ensue if things didn't improve very promptly. This kind of data kind of reinforces the view that things are quite mixed, and you could call this essentially a Goldilocks report in terms of employment. The unemployment rate also remained a little up, but as expected in 3.6%. Across the sessions, the Dow Jones Industrial Average, the S&P 500, and also Nasdaq 100 are all positive on the day. The Dow Jones Industrial Average rallying more than 1% on the back of the news. This was entailed and mixed with the US ISM that came out at 3 p.m. this afternoon. This signaled a weaker ISM, but also did reinforce the view that the Feds may cut again in December. Also in the session we saw the FTSE 100 and German 30 up on the back of the news. We also saw in the Asia Pacific session things were a little more mixed, however, as the Asia Pacific session got to grips with the reports that the Chinese side may be reluctant to do anything beyond a phase 1 deal, something we covered in yesterday's outlook. Also looking forward at equities, Apple was the biggest mover in terms of the larger stocks, climbing more than 1.9% on the day. This came on the back of the things we've just discussed. So expect further moves to follow if the Fed do actually cut in December. Also in the session we saw Facebook up a little, 0.6%. We also saw Nvidia up 0.7%. This is kind of a theme that we see across the market, with the tech sector booming the most. In terms of commodities, things were a little more mixed. Oil was more positive on the day, with US WTI and also Brent crude rising more than 1.5% across the board. This came on the back of the few factors we've talked about above, but also a kind of general sense of positivity in the market. Natural gas was also a little higher. This has kind of been the star of the week, climbing more than 6% since Monday's open. Also in the session we saw copper a little lower and a little weaker. This came on the back of demand concerns rising once again in the market. Also in the session we saw gold bounce up and down in a kind of tennis ball range, or motion shall I say. First falling on the non-farm payroll report, however, climbing back after the US ISM, which meant that the Fed cuts were still likely on the table for December and moving into next year. Also in the session we saw the bond yields more mixed. The US 10-year was up, but the 2-year was a little flat on the day. The German yields are more positive, with the 10-year and 2-year both positive, and in the UK we finally saw the positive yields turn into action from quite a negative week, I would say, with yields falling more than 5 to 6% yesterday. Finally, in the FX sphere, things are quite mixed also. Initially, the pound did fall on the back of the NFP report, however, it's returned back to flat. This will be quite key to watch to see whether it could break the 1.30 range and also move towards the 135s and possibly even the 142s we saw earlier this year. Also in the session we saw the euro dollar a little stronger. This came on the back of large option expiries in play, and also the factors that we've kind of discussed throughout this video. Also in the session, US dollar Canadian and US dollar Japanese yen were more mixed, bouncing around on the back of the news as you would expect. Finally, but not forgetting, is US dollar Chinese yuan, which bounced a little higher on the back of the US ISM coming a little weaker, hence signaling the less risk in the market with the Fed cut, and therefore bouncing a little. That's all for today, guys. Thank you so much.